coming on to describing the appeal process. So whenever any taxpayer has any complaint with HMRC, they can appeal about this. They can further complain about this to certain departments, okay, on the above authority. So interaction resolution of disputes, how can the disputes can be resolved? HMRC statutory body review would be there, who would review the complaint or review the tax procedures, tax payment, okay. And then there are appeal tribunals. So this is the body. If you have any problem with HMRC, anything you feel like that's not certain, or I mean sorry, that's unfavorable by your side, or that's not fair, you can complain about to the upper tribunals, okay. So then there are taxable sources of income, so it will be discussed about, okay, sorry, a different type of tax, and then that will be applied on the taxable sources of income. Now key reference for sources of UK legislation, statutory instruments are there, case law, HMRC statement, concessions are there, okay. So yeah, that all I am going to discuss in detail in this particular chapter. Okay, so yeah, let's start with the purpose of the taxation in the modern economy. So yeah, let's begin with this. So yeah, taxation has two main economic purpose. First is to that is the funding for government. Of course, how does the government get money? Through tax only. Government tax is the income for government, right? Like see, tax is income for government, and this income they'll spend on the society, right? That's the thing. Now government will also a tool for macroeconomic management to control the economy. Suppose the economy is in recession, okay, recession in the sense people do not have any demand for goods or services because they do not have income, but majorly due to that they do not have income, there is less demand in the economy, okay. So due to recession, less income, less demand, right, less demand. So the tax department would reduce the tax in the sense reduce tax. So once they are reducing the tax, that will help to generate more demand, generate more demand, more demand for goods or services, for goods or services, okay. Okay, I you can services. Yeah. Sorry for my bad handwriting. Okay, I hope you understood. That's what it matters. Okay, so yeah, a tool for macroeconomic management to control of the domestic economy. So influencing demand, they can also decrease the demand. Suppose in case of inflation, people have a lot of money. So due to tax, they'll increase the tax rates so that people's demand would be decreased, and there will be less money flow in the market. So less money flow due to high tax, okay. So that's why tax is very important for an economy, even for individual, for economic development, or to control government, sorry, this is a tool used by government to control the economy in short, okay. So taxation is also very important tool to pursue number of social objective. The structure of the tax system can affect the redistribution of the wealth. See, and this in the sense social objective. So if the, let's say if I talk about okay, I'm from Ahmedabad, just a second, okay, I'm from Ahmedabad, okay, Ahmedabad. The reason why I'm telling you, just a second, alcohol over here is illegal. It means Ahmedabad is a dry state, okay. So social objective, alcohol is, if even if someone is getting in a black market, it's extremely costly. Why? Because there is higher tax. Even if you check some smoking tools or some tobacco, it has higher tax, okay. This is a social objective. The society, the government is trying to control their consumption, okay. So that's how it is. Now coming on to the UK tax system also encourage individual to save pension provided by offering tax incentives. So yeah, individual will be given many benefits to invest into pension scheme, invest into some shares, invest into some kind of mutual funds, that is venture capitalist funds, similar, okay. Invest in pension scheme, so they'll give multiple benefits, okay. For saving income as well, there are multiple benefits. So it's not that they'll tell you, they'll give you benefits, that's how they'll promote it, okay. And then there is charitable donations and gift aid. So in case of any donation, UK government gives the benefit on it. This is an allowed expenditure. So if there is any expenditure made, that's an allowed expenditure. If something is allowed, it means less tax would be there. See, understand? Income minus expense. So that is your income. On this, you will have to pay tax. Suppose there is an allowed donation is an expenditure. So yes, of course, it will reduce the tax amount on that. Okay, so that's what it is about. Now it comes on to the UK tax system discourage certain behavior such as monitoring by imposing fuel duties. So yeah, on UK the government also charge on motoring, not monitoring, sorry, motoring. UK government also charge motor expenses. I mean, tax on CO2 emission made by car CO2 emission. Why? This is a reason, this is a tool to manage the tax, the government, to control the tax. Okay, and then it also has high tax on smoking, drinking by imposing taxes. Okay, that's not tax free. That's what I've told you. So tax policy can also be green issues through imposition of climate change levy on landfill tax and company cars aim to reduce the carbon emissions. So in short, those companies which are making high environmental pollution, on that UK government can charge high taxes so that they could be in a control. Okay, so yeah, that's what it's talking about: green issues, climate change, levy, landfill, etc., everything. Okay, so yeah, that's it. I hope you understood. Now coming on to the next part. So the structure of the UK system. So responsibility, just a second. So the structure, if I talk about the structure of the UK system, responsibility of assessment, collection of UK tax lies with HMRC only. His, okay, I'll tell you the full form about this. His revenue and custom. His Majesty, revenue and custom. Earlier it was her when the queen, when there was a queen. Now there is a king, so that's why His Majesty. Okay, HMRC is responsible for administration and collection of the tax and duties. So administration part, collection part, everything is under the HMRC. Okay, so taxpayer can appeal against any decision made by. So appeal against any decision made by HMRC with certain time limits. After initial appeal to HMRC, appeal can go into first trial tier tribunal, upper tier, which deals with more complex cases. Okay, in case any taxpayer has any problem with HMRC, suppose there is a time limit issue or there is a penalty issue, first they can complain, they can let know about that, inform about that to HMRC. Of course, that, like, they need to inform, right? And then they can go to first tier, sorry, tier. And even if the issue is not resolved, they can go upper tier. That's how they'll solve this particular issue. Okay, in more complex cases, that's how it will be dealt with. So yeah, that's it. Moving to next. Now, okay, there are certain types of taxes: direct tax and indirect tax. Okay, just a second. Okay, sorry. Just hold on. Huh. So there are multiple type of tax, direct tax and indirect tax. So brief about this, I'll tell you. Direct tax is usually levied. Direct tax is on income and gain, income and gain. But indirect tax is on the consumption what you make. IDT, which is on the consumption. Okay. For example, till 18 years, I assume no one is earning, or even if they are, let's say till 16 years, they are not earning, right? But isn't that they are consuming something? Aren't they paying GST in India? Yes, they are. As soon as a kid is born, or whatever product, when you're born till your death, you have to pay tax. Tax is the one thing which is, there is no escape from here. Okay, so yes, as soon as a person is born, kid is born, they have to pay tax which is in the form of GST, that is indirect tax, that is on the consumption, whatever it consumes. Doesn't matter even if there is income or not, but still indirect tax is about to be paid. Okay, but if I talk about the direct tax is usually charged on, okay, there are again usually income tax and CGT, and IST is also there. Okay, so yeah, on whatever the this is on whatever the income you are getting, on that you're going to pay the tax. That is direct tax. So here, once overall tax yield has determined, the specific ways of raising tax revenue have to be considered. So this is a tax revenue for the government, right? So how they consider that is either direct tax or indirect tax. So direct tax are levied on income, chargeable gain, capital transfer, IHT as well. Okay, so direct tax includes some tax NIC. Okay, NIC I'll explain in brief about this. Actually, what happens, UK government gives a lot of benefit. Okay, so whatever the individual earn, either through employment income or through trading income, they have to pay NIC. NIC is national insurance contribution. Okay, now this will give benefits to them. Okay, now NIC is not deducted from CTTs, IHT, it's only from earning. Okay, either trading or employment. So NIC would be deducted from trading or employment activity. Okay, that's about the NIC. So yeah, that is deducted. NIC also calculated. Capital gain tax makes sense. What are the gain that is? Okay, IHT. IHT is, okay, I'll explain IHT. Sorry. Yeah, IHT is whenever you are transferring an asset to someone else. Transferring an asset. There are, I'll teach IHT in detail, don't worry. So whenever you transfer the asset to someone, another party, at the time IHT is payable. Okay. Now coming on to corporation tax with HMRC. Okay, that is corporation tax also. This corporation tax is levied on the companies. This is paid by the companies. Okay, and directly from the taxpayer. Now, indirect taxes are applied to spending on the goods and services supplied to individual and the business. Indirect tax include VAT, which HMRC collect from the supplier who collected it from the taxpayer. So yeah, indirect tax in UK, that is VAT. Okay. Now what happens? See, how is government gonna charge VAT? No, government is not gonna charge VAT. So how does it happen? Suppose there is a let's say furniture manufacturer. Just an example for you. Okay, some basic raw material they would need is like let's say they would need wood, they would need glue, glue, paint, right? Paint. Okay, now if I talk about furniture manufacturer, that is a VAT registered manufacturer, VAT registered. So whenever they have purchased anything, they would have paid VAT on this, on this. Okay, whatever the raw material they purchase. In short, whenever there is a VAT charge on purchase, that is input VAT. One easy way I would tell you to remember is whenever goods come in, input. Whenever goods go out, output VAT. So whenever they are selling, let's say some tables, they are making a table and they are selling the table, then on that output VAT will be payable. Output. So output VAT is that is output VAT is payable by customer to them. So output VAT is again income, on income, right? And this is on the expense, right? So actually what happens, HMRC will tell all the companies to charge VAT from the consumers. Consumers, see, read it. Please focus on my wordings. Consumers, I'm not talking about customers. The reason is customer can be a wholesaler, can be a retailer, and if they are VAT registered, they won't be charged for the VAT. Why? Because this input VAT can be recovered. Recovered how? Whenever you have to pay output VAT, output minus input, whatever the extra VAT is, you have to pay that. Pay this. That's the thing about. Okay, so that's why I told not customers, consumers. Now, consumers, are you VAT registered? Okay, okay. Better question. If you're working professional, I mean, if you're working as an employee, okay, somewhere else, XYZ, you don't have a, you are not GST registered. Are you gonna get benefit? No. Or like that, those GST benefit, they can only get it those who have companies on their name, okay, or those in the family, those who have companies, they can only take the benefit. Those people can take the benefit. Now, other people cannot take any benefit. So that's why I said consumers, not the customers. So VAT is an indirect tax. Now, this is an income for HMRC. Income for HMRC. That's it. Okay. So yeah, Okay, sorry. That's done. Now, yeah, that's it. I thought I left something. So yeah, now then there is capital and revenue taxes. So a brief about capital and revenue taxes. So capital taxes is whatever assets you own on that tax is charged, and revenue whatever the income tax and profit you get. So for example, capital tax I can say CGT, because on this is on assets, right? Whenever you're disposing an asset, at the time of disposal you will have profit, on that you have to pay the tax. Okay, and in case of revenue taxes, there is this what do you say, yeah, employment, trading, on what, on your revenue, whatever revenue you are earning, even from your rental income. Here IHT will also fall under the capital tax. Okay, that's it. Now you have relevant taxes. So income tax, individuals, employment, self-employed. So this is direct. Okay, and again a revenue tax, not a capital tax. Makes sense. Corporation tax, it can be both. Okay, by corporation tax, see, for individual CGT is different. Rates are different. Let me show you the CGT rates. Look at this. This is the tax rate sheet which will be given to you in the exam. So this is for income tax normal rates. Now see, basic rate band pair up till this 20%, 8.75% for dividend, high rate 125,140, 40%, 125,140 it is, okay, and above that it's 45%, that is additional rate pair, basic, higher, additional, okay, 20, 40 and 45. This rates will be given to you in exam. I'll explain this later on in the next chapter, it is covered, okay. Now if I talk about CGT rates, see, this is the car benefit. See, look at this. CO2 emission. This is the tax rates. Higher, higher tax. It is detail in detail. It is covered in employment chapter. Um, this is the CGT. See, 10% basic rate band. So 37700, 125,140 up till this 20%. It's not separately for CGT. It is income plus CGT. Plus gain, I mean CG, okay, then the CGT will be payable 10-20%, okay, that's it. So this is for individual CGT would be different, but if I talk about companies, see, there's two rates given. So companies for 19% and 25%, that is only given till 2023. It was only one rate. Now that is small profit rate and main rate available, okay. So which will I'll discuss in detail in the I mean corporation tax chapter. So that's why for corporation tax, it could be both revenue as well and capital as well. It's not that only one would be there. Now, if I talk about CGT, this is again direct tax, whatever, it's not indirect. Indirect is something which is on the consumption. So, doesn't make any sense. So, yeah, it is capital tax. VAT is neither CGT nor revenue. It is what? On consumption. So, it's not revenue, not the gain. Okay, so this is indirect tax. NIC again direct tax, and it is revenue. Why revenue? I've already explained. Trading income, employment income. Okay. So yeah, that's it. Correct. You can just give it a read later on. There are multiple type of NIC which will be discussed in the particular chapter. So okay, let me give you a brief, very small brief about it. So NIC also has two types of NIC will be there. Okay, sorry. It's already here. It's already discussed here. So yeah, just a second. Here NIC would be given. Yeah. So there are two types of NEC. This is on employment income. This is on employment income, and this is on employment income. This is a part of trading income. Now this will be for companies, for individual trader. Okay, they have to pay. So yeah. Again, this is employees NIC, employer NIC, employer NIC. In short, if you wanna remember, employment NIC will have one, whatever the one, and trading will have four. Earlier it was two as well, but now it's only one. So it might be possible when you study text, you had 2 NACs for trading, 4 and 2, right? But now you'll only have 4. So I'll discuss this as well in the particular chapters in detail. Okay. So yeah, that's it. So now there are sources of text law statute. So yeah, let's discuss about it. I mean, just for knowledge sake, it is important. So, sources of text law statute is talking about each year Finance Act, whatever the text act that is known as Finance Act. Okay, Finance Act, Finance Act. So, Finance Act passed extending, reducing, or modifying existing law. The last act relevant to this exam was 2024 and Finance number Act 2024. So yeah, we are studying right now FA 2024, which is for applicable for 2024 year. I mean for 24-25 year. Okay. Yeah. So here an act of parliament is a source of primary text law. Act of parliament is a primary source of law. Number of acts which are important sources of text law include taxation of CGT Act, okay, Social Security, and 1992 VAT, okay, see capital allowance. Capital allowances, you have studied depreciation, right, in your FR exam or SBR exam or even FM exam. So capital allowance is just like a depreciation, but the tax department does not allow capital allowance. The reason for this because no, sorry, the tax department does not allow depreciation. They allow capital allowance. The reason for not allowing depreciation is depreciation is an estimate. It can be manipulated. That's why tax department will give different rules, set of rules for capital allowance. Okay, and then there is income tax on the pension, your trading income, income tax act, normal income tax, and the corporation tax act. So that is all about it. All the sources. Okay. Now there are some statutory instruments as well through which a government will control. So statutory instruments are a form of secondary legislation which allow government department to implement provision made in Act of Parliament so they can be brought into force without having to pass a new act. Statutory instrument, you can say that the Parliament is acting. I mean. Yeah, the parliament is acting on the behalf of government, so that not always the changes are needed, but still it can be done. It's like it makes a kind of act or instrument which everyone will follow, and through which everyone will follow the text rules. Now then there is judgment, case law. Okay, so judgment made by high court, court appeal, and the supreme court may modify it or add to the body of the statute law. So case law is just like whatever the judgment made by high court, court appeal, or supreme court, they can modify it. Okay, or like they can modify the rules or regulations of the statute law, or whatever the body is. Okay. Now coming on to HMRC and the practice of extra statutory concession. So statement of practice are issued by HMRC to assist in interpreting the meaning of application of the statute law, whatever the statute law has passed. Okay, so HMRC can issue a statement of practice to understand the application, to understand the meaning and everything. Extra statutory concessions are provisions for the relaxation, strict application of law, where it would lead to anomalies or hardship. So there is extra statutory concessions as well given. Now, sometimes it's also act as relaxations, and sometimes it's very strict to avoid any, anomalies or any hardship in the sense, any unfavorable circumstances. Or sometimes they can give the relaxation as well. Okay, relaxation for the strict application. So yeah, that's it about this video. In the next video, I'm gonna discuss about this topic.